We originally talked about that vision with colored coins in 2012 of real-world assets moving on-chain really required that policy change, and now it's happening. And now is basically when things get real, right? With real-world assets on-chain.
Do you envision that we're going to need the support of AI agents when we're sleeping to manage our portfolio?
I have no doubt that retail investors can become significantly more successful investors using AI and using AI agents that operate easily over those APIs.
This episode is brought to you by VeChain. VeChain is one of the top layer 1 enterprise blockchains in the crypto asset class, and they are getting adoption by many big brands and companies around the world who are building Web3 and decentralized application technologies. I've been a VET token holder for many years. In fact, I started investing in VeChain back in 2018, and some of the key features of the VeChain blockchain includes it's secure, affordable, scalable, fast, and sustainable. Some of the companies and brands working with VeChain include Givenchy, Walmart China, BMW, Boston Consulting Group, and many more. Most recently, they partnered with Dana White in the UFC, and Dana White even said recently that he purchased over $1 million of the VET token. And VeChain also recently launched staking, where you can stake the VET token and earn great rewards. So if you'd like to learn more about VeChain, go to vechain.org. Link will be in the description. Hey folks, welcome into the Thinking Crypto podcast. I'm your host, Tony Edward, and joining me today is Yoni Assia, who is the co-founder and CEO of eToro. Yoni, it is great to have you back on.
Thank you for having me.
Yoni, really excited to dive into the latest with eToro. Just a few months back, eToro went public, listing on the Nasdaq, and you've made a lot of progress with developments and new services and solutions. Maybe we can kick it off with eToro's IPO. What led up to that, and what does it mean for the company?
We've been building eToro since 2007, always with a vision of opening the global markets, capital markets, for everyone to trade and invest in a simple and transparent way. I've always known that at some point eToro will become a part of public markets, will become a public company. And we definitely felt that after an amazing record year in 2024, this is the time for us to become public and to stage basically our plans for the next stage of growth for eToro as a public company. It's definitely been one of the most exciting journeys I've ever been to. I think last time we spoke, just after the Warren Buffett dinner, I told you about like the 3 big aha moments I had in my life. One of them was obviously the first time I saw the internet. The second was the first time I traded stock. And the third was looking at crypto and Bitcoin specifically, understanding how blockchain technology eventually replaces everything in the financial services industry and everything becomes digital. And no doubt that being in this process of the IPO process and meeting investors who manage more than $30 trillion, which is mind-blowing, like the size and scale of US capital markets and how you meet investors from all around the world, is definitely another one of those amazing moments where you come out a bit of a different person understanding how the markets work.
Absolutely. And congrats on all the success and the growth. It's just exciting. And Yoni, you and I have spoken over the years, and over the past 4 years, I couldn't even imagine crypto companies doing IPOs, because there was so much aggression against the industry. What are your thoughts on how the environment has changed? And obviously that has benefited you going public and much more.
So it's definitely been an amazing, process to see how much the U.S. administration and SEC administration really shifted from negative sentiment in crypto markets to an extremely positive sentiment. I've never would imagined 5 years ago to see your U.S. president talking about crypto nonstop in administration with a crypto czar in it, SEC chairman Paul Atkins revealing crypto project, saying America is going to be the front and center of crypto markets. So I think it's definitely amazing to see how US and US public policy have really adopted the crypto mindset, the fact that capital markets are being digitized or being tokenized and have brought that into the front and center of policy. And that's definitely a very big difference from where it was. And by the way, we're regulated at eToro today. Still, our biggest market is Europe, which has now MiCA, which is a pan-European digital asset regulation. We have the UK, which has been relatively early into crypto. The FCA, the regulator there, with licenses also in Australia, Singapore, Abu Dhabi, and of course the US. So it's really amazing to see how that shift globally moved from where it was, 5 and 10 years ago. Very anti-crypto. Banks are very anti-crypto 10 years ago. 5 years ago, gradually adopting, talking about it, to where we are today. Every single financial institution in the world, every single bank, central bank, has their blockchain strategy, their digital asset strategy. The largest financial services or asset managers in the world, including partners of ours in smart portfolios like Franklin Templeton, like BlackRock, like Fidelity, are launching their own tokenized assets. So it's quite amazing to see that vision, where we originally talked about that vision with colored coins in 2012 of real world assets moving on chain, really required that policy change. And now it's happening. And now is basically when things get real, right? With real world assets on chain.
Yeah, well said. What an amazing change. And it seems everyone is recognizing the benefits and potential of this technology. You mentioned tokenization of markets and much more. eToro has been leading the charge, doing a lot there. Tell us about your plans for tokenizing assets such as stocks.
So generally, we were very early into the concept of how do you tokenize real world assets. We wrote the Colored Coins protocol actually with Vitalik Buterin, the founder of Ethereum, 2012, and ever since have been very involved in this space. It's amazing to see, I say, obviously, the most famous large tokenized assets being stable coins, or the USDC and USDT stable coins, which have emerged. We started tokenizing assets in 2019 and then continuously now almost started expanding it. The biggest challenge has always been one, regulation, and the other part is liquidity. So if you think of the sort of aha moment when starting to use Bitcoin, it's really about the fact that this asset is potentially self-custodied, whether self as an individual or a firm, right? So you can own the actual asset yourself. And it's 24/7 transferable, which also means it's tradable 24/7. And I think that coming to financial markets, meaning eventually all markets become 24/7. And we are already seeing that shift in stocks, with many stocks moving from just 8, 9 hours a day to suddenly 24-hour a day trading. That shift has come also in futures, which we recently launched, which are 23 hours a day, 5 days a week. I think that transition where assets become digital, movable on chain without a dependency necessarily on a centralized entity being open at that time, is the future of all assets, from bonds to real estate. And I think now we're starting to see, just again, very early days of tokenizing real world assets and enabling global access into the global markets in the form of digital assets. And again, super interesting to see how front and center that is for now US policy, talking about taking capital markets on chain. And I do believe, and we are already seeing many other market participants that are very keen to see how this creates more liquidity, more opportunity, more capital for formation opportunities across different industries.
Yeah, and well said. And one of the things I've been thinking about is the tokenization of these assets gives a lot of people around the world who didn't have access to financial services and being able to invest and make their lives better, right? Even if they're just buying a handful of tokenized stocks, they don't have to be millionaires, but maybe you're in some country in Africa or Latin America and they want to buy some Tesla stock. Maybe to buy two tokenized versions of it. That is access they never had before, and they can benefit from the appreciation of those stocks.
100%. And again, our view has always been to help people get educated about the markets. I think, everything around crypto is also connected to inflation. to people talking about inflation and money printing, understanding the value again of Bitcoin specifically as a hedge against inflation relates also directly to owning stocks and capital markets. And I think the 400 million research people using now digital assets or crypto assets will now shift into those individuals who already learn how to invest and trade in crypto assets into also capital markets.
Mm. And then do you envision that there's also the DeFi component that if I can own these tokenized versions of these stocks, I can probably put into some lending program, earn yield if that's available, along with stable coins and other crypto assets?
100%. So the big advantage of, I'd say, the last 5 years is if you look at sort of the crypto asset technology, DeFi technology, I've always said it's like an island filled with engineers that are constantly like building technology and solutions, but can't connect to like the real world where the vast majority of assets, physical assets, real assets are. The beautiful thing is if you look at a lot of the DeFi projects, everything around lending, collateral, everything around things like flash loans, which are mind blowing and don't exist in the real world, of multi-party smart contracts, which again are extremely hard to do between financial institutions. When all of that get unlocked in financial services, in connecting financial services entities and companies and people around the world, I believe that unlocks a lot of innovation that, for some extent, is hard for us to imagine. But if you just think of the simple, like, big benefit of smart contracts. Within a smart contract, you define the contract as code.
Mm.
Then you have a lot of different individuals, whether it's users or companies, can then access that code. Now, if you compare that to how traditional financial services work, it's like us as a company, Toro, with Goldman Sachs or BlackRock or another participant. Each of us need to have a contract between ourselves. It's very hard to create innovation that basically pans around multiple participants. And I think, again, we're very early stages of that. We've seen a lot of that technology evolve in the crypto space. The benefits of those technologies coming into basically mass retail usage are, again, very exciting.
You mentioned Goldman Sachs and some of these traditional institutions. Is with the emergence of the internet around the globe, people having smartphones, being able to trade on eToro or other apps, right? Do you see in the future we're less dependent on investment banks like a Goldman Sachs because we have the tokenized versions of these assets? The markets are opened up, and I could just do it from my phone. I have more education because I'm learning from brands and companies like eToro, but also the wealth of information on the internet that TradFi is kind of losing some of their market share or power, so to speak.
So obviously, I believe in what eToro does, which is direct to consumer, and there's no doubt that direct to consumer technologies. If you just think about the internet and companies like Google and Apple have grown significantly bigger than just sort of B2B companies or a lot where you have a lot of intermediaries. I have no doubt that our generation, and again, this is generational shift. And if you look at this generational shift, you can sort of split it into two, front end and back end. On the front end, you have what will become in the next 25 years the wealthiest cohort of individuals on the planet. Younger generations, Gen Y, is going to roughly have $80 more trillion in the US alone, 60 trillion additional dollars in US and Europe. So that's $140 trillion moving from older generations to younger generations, where our generation, Gen Y, really expects to access technology through their mobile phone. It's going to be your AI glasses, but it's technology first, product first approach, where people expect to basically interact with whoever provides them financial services across different verticals, whether it's money transfers, whether it's trading and investing, with constant focus on how can I use the latest technology, in eToro's case, to help make me a better, more successful investor. So on the front end, we're moving to where my father used to tell me that, a financial product is a hedge fund or an ETF, basically a listed TradFi product, usually denominated in a local currency, the local exchange, to asking Gen Y, what's a financial product? And they would say an eToro app, or basically
Yeah.
would name an app on their phone. That's happening on the front end. Then on the back end, that's where blockchain technology transforms from being dependent on basically local financial institutions. So if you think, at the world, it's still extremely fragmented.
Mm.
Every country has their own financial institutions. We operate in 75 countries. And it's quite amazing. You go into almost each of those countries. Because I've been doing this for 18 years, I can name you where the brokers, banks, and insurance companies in France and Italy and Spain and the UK and Australia and Singapore and the US, very different companies. Because again, financial services has grown from being basically a local industry on the B2B side, a global industry, but still all of the consumer companies are very much still hyper local. When you think of blockchain unlocking basically access to all of those markets 24/7, to a lot of new technologies on the back end, transforming the entire financial services paradigm, that's another, okay, maybe it's by the way the same, $140 trillion who are going, in my view, to move on chain, right? So you have one is those assets are going to move from older generations to younger generations, which have a very different user experience expectations from the firms constantly providing them with the most advanced technology. And on the other hand, you have those assets that are moving from archaic, by the way, in some cases, COBOL systems in banks that were written in the 80s or the 90s, moving to 24/7 blockchain-based technologies. And those basically two very, very big paradigm shifts are going to transform everything around finance, in my view, to the better.
Absolutely. And with the move to 24/7 markets and access to all these new assets because they're being tokenized, do you envision that we're going to need the support of AI agents when we're sleeping to manage our portfolio? So, two-part question. Do you envision AI being part of it? And is eToro looking to leverage that technology as well?
So one, we're already leveraging that technology. So we recently announced two very big AI projects that, in my view, are going to be extremely significant for eToro's growth and also what becomes the user experience in an AI world. So I do think these are definitely the two biggest technologies happening right now: AI and smart contracts, and the relationship between the fact that AI agents can actually interact both via APIs as well as via directly smart contracts. And what we launched is one, an AI analyst story that enables all of our customers to actually interact through chat, to basically look and understand what other people are doing on the platform, to immediately after earnings ask the analyst to compare what's happened right now in earnings. How does that impact my personal portfolio? What's happening in the markets? How does that impact my portfolio and what other people like me are doing? You can do all that through chat. And on the back end, we're opening APIs for all of our pro investors to actually build apps with vibe coding. So think about the difference of, I've been passionate about building algorithmic systems since I was about, I think, 13. I started to trade. 16, I already wrote my first program trying to basically build algorithmic trading for me, which was a very, very big project. And over time, what you see is the ability and how fast you can actually launch a quantitative strategy, an agent that looks at your portfolio, that looks at what's happening in the world in real time, that's able to adjust to what's happening in the world 24/7. Maybe another agent, which is your chief risk officer, who's managing the risk parameters of your portfolio. I have no doubt that retail investors can become significantly more successful investors using AI and using AI agents that operate easily over those APIs. We're opening that world now on top of obviously real world assets, stocks on eToro from 22 different capital markets. And obviously that connects directly to our eToro Popper Investor Program. So when our most sophisticated investors are starting to use those APIs and tools, the rest of our customers can actually copy them on our platform very easily, basically gaining that alpha themselves as well.
That's great. I love that. And the AI agents can really help people who are new to this stuff to hold their hands, right? And educate them. And I love that you can also, mimic the top traders and investors. I really love that. That's a great concept. One of the things I read recently is that you're expanding your crypto assets that you offer to users in the US. Talk to us a bit about that. I believe it's going from 3 to over 100.
So we already support more than 150 crypto assets worldwide, constantly adding more and more crypto assets to our global offering. And with a shift of policy in the US and more clarity in the US about the ability to both trade crypto under obviously the right regulated environment and the right listing requirements, as well as staking, we do see now better clarity and more positive clarity on the ability to launch more crypto assets. And as I said, we already support 100 crypto assets, and we do plan to continuously now expand basically more and more assets on eToro. So on eToro, we're constantly looking not only at, let's add more crypto assets, but we added futures trading, 24/5 trading, starting to look at tokenized stocks trading, as well as options trading. So continuously expanding the universe to find opportunities eventually for people to trade and invest in.
Yeah, that's great. I love there is more options, and obviously, to your point, the U.S. being more friendlier to crypto definitely helps. One of the things on the note of being friendlier, the Clarity Act, the market structure bill, is set to potentially pass this fall. The Senate pushing it through, and it goes to President Trump for signatures. What impact do you think that bill will have? Because it has the meat and potatoes, tokenization, DeFi, all the different things. What's a security? What's not? What impact would that have on your business and your growth here in the United States?
So I think the biggest, again, in Europe, Europe actually, if there's one thing Europe is very good at is regulation. And what it has been able to do is create a very significant build of Mika, which basically covers stable coins, tokenization, trading in crypto assets. So we've been actually very much involved in that. We got our licenses this year across crypto assets after a lot of work with regulators across the globe to really understand the risks and benefits of crypto assets and digital assets. And I do believe US being by far the largest capital markets in the world, now adopting better regulations and having more clarity will bring in just more liquidity into the markets. And more liquidity into the markets means more assets in the markets that are more liquid, potentially and eventually 24/7. So I think this is definitely the steps in the right direction to again foster innovation and enable companies to succeed in a more clear way, both in the US and outside the US.
And on the other side of the token, you have the Genius Act that was passed into law. That's a stablecoin bill, of course. Do you expect a stablecoin innovation explosion? Is eToro looking at launching its own stablecoin, or will you be using stablecoins already in the market?
So we are using stable coins as we are expanding more the ability of our users to actually convert crypto that they bring in from other exchanges into eToro. So it is something we're opening more and more the eToro platform to be able to actually not only trade crypto and trade stocks, but actually bring in your crypto and trade stocks from your crypto directly. So that's definitely a place where I do believe the fact that there's better clarity on regulation helps more people actually expand from crypto or diversify from crypto into the stock markets. We haven't thought on us basically launching our own stable coin. I'd say never. But again, definitely that unification. I think what's happening really is unifying the world eventually. People right now, when they look at eToro and they look at our customers, 3.5 million customers who at the end of Q2 had $17.5 billion of assets, you actually see almost every quarter our customers have the same amount of stocks and crypto in their accounts, which is very unique because if you look at traditional brokers, even if they had added crypto, it's going to be a very small part of their assets. In eToro, it's roughly 50-50 between crypto assets and the stock markets for the past 4 or 5 years. And I think what's gradually happening again is that concept of digital assets, which is the unification between capital markets and existing real world assets and crypto assets, which is the technology of blockchain right now powering mostly crypto assets.
Mm.
And that unification in the middle eventually will be, in my view, bigger than the two parts separated.
Yeah, well put. And I've been thinking a lot about this lately with this convergence, right? Like you mentioned, with traditional markets and the crypto markets and everything going on blockchain rails. You have stable coins, which will power your payments, smart contracts, which can power our contracts or agreements and insurance policies, whatever it may be. And then the tokenization of assets, real estate, stocks. It's amazing the world powered on block or running on blockchain rails.
Again, the opportunities are mind blowing. Every innovation that has been sort of coming into effect on traditional TradFi world uh, becomes sort of more interesting when you think of blockchain assets, whether it's tokenization and fractionalization of assets. So we've been, I think, one of the first brokers worldwide actually offering people to buy fractional shares across now more than 20 different capital markets. Think about fractional ownership of real estate. Think about democratizing quantitative trading, which is something we're doing now we need eToro to quantitative more bond trading or access to private markets. So again, when you think of those technologies of fractional, global, 24/7 transferable assets, I think those opportunities will create a lot of opportunities of capital formation as well.
Yeah, absolutely. One of the things we've been seeing recently, is the trend of digital asset treasury companies. A lot of companies buying crypto assets, putting it on their balance sheet, and there's that, the NAV aspect of increasing their stock value and much more. And this seems to be a global movement. Recently, Ethereum specifically has been getting a lot of adoption. What are your thoughts on what's happening there in this new avenue, so to speak, of people buying assets, crypto assets?
Well, first of all, I think it makes sense for companies to buy crypto to their treasury, or obviously from eToro's point of view, it's part of our business trading in crypto. We were actually probably one of the first companies to have a significant crypto treasury. We used to have in 2000, I think 12, 13, we bought about 3,000 Bitcoins. We had in treasury for a while, but eventually sort of uh, that became working capital in eToro to actually fuel the growth of our crypto business that significantly scaled in 2017 and then later on in the bull run of 2020, 2021. So I think, owning or diversifying your treasury or diversifying your balance sheet always makes sense to, again, significantly large public companies. Regarding sort of the specific companies that are only treasury companies, I think, again, you can't really argue necessarily with what I would say is significant success of MicroStrategy, building, I think, roughly $100 billion market cap of that specific treasury. I do believe in Bitcoin as an asset class, as a hedge against inflation. And what MicroStrategy or today's strategy did is that they made access to those markets in a simpler way to different type of investors, whether it's investors who are looking to invest in debt, or convertible debt, or just equity markets. That was prior to the ETFs. Right now, we also have the entire ETF industry on crypto, which is quite significant.
Yeah.
I would say that there are risks or even more significant systematic risks when you think of usage of leverage in some of those entities. So I would definitely say that there's sense in leveraging crypto. There's also a lot of risk in leveraging crypto.
Mm.
And when too many people jump on basically leveraged crypto ships, my concern is that in a deleveraging scenario, and usually what happens is when markets contract and markets correct. And I've been in capital markets now for 30 years. So every time you see capital markets contract and correct, a lot of times leverage comes out very fast. So when we think of the entire sort of digital treasury public companies space, you need to understand uh, the leverage of those companies. You need to really understand what happens in a significant market correction, and remember that sometimes markets, as much as they go up, when they correct, it's usually a faster correction. We've seen this a couple of times with crypto, whether it's 18, 19 correction or relatively recently 2022 correction. And just people need to remember leverage goes both sides. And I think a lot of people still remember the Grayscale fund, which was actually at a significant discount
Mm.
to its NAV for a while. So again, premium and discounts to NAVs is something that is seen in the markets. And now that there are more and more companies, I think those companies need to make sure people understand the risks of basically leveraging crypto, and maybe a bit more conservative. I like owning my own Bitcoin.
Yeah, I'm in total agreement with you 100%. I tell people like, look, I don't hold any MicroStrategy stock or any others. I just hold the asset, Bitcoin and Ethereum. And in addition, to your point of leverage, I often talk to people about it. If you take some of the cash on your balance sheet and you buy some Bitcoin or ETH, I don't think there's a big deal with that. Maybe you take 25% of your cash. But then if you go raise billions of dollars to go buy an asset and put yourself in debt, and that's that's the risk has increased 100-fold.
I think there's definitely, as this expands more and more, there's systematic risk here, but also there are very smart players in the ecosystem. They just need to make sure they manage that risk, and customers need to be aware of the risks of high volatility and leverage. That's always true, whether it's traditional capital markets or crypto markets.
Yeah, absolutely. Yoni, I don't want to put this on the air, but I have my gut is telling me there's like a .com bubble 2.0 forming here. Not that the underlying technology, anything wrong with it. It's here to stay, but humans are speculative beings and we can't help ourselves, and we're going to run the leverage up, and then there's going to be a flush out like you were saying, and then a reset, of course. I feel like that's what's coming.
So I think again, I always say like my story of falling in love in capital markets is the .com bubble.
Mm.
And my biggest learnings of capital markets is the good .com bubble burst. So that's the nature of the markets. The markets go from being sort of irrational exuberant to irrational bearish. And when it's irrational bearish, there's a lot of value opportunities. We
Mm.
definitely saw it this April, just not long ago, where the markets reacted, in my view, a bit irrationally to tariffs. Everything fell sort of, 20, 30, 40%. You can actually look at my public portfolio. I just bought that week, I think Google and Nvidia and Tesla after they fell like 30, 50% from all times high. So I think a part of the markets is cycles. I think in public markets, we've seen not long ago in 2022, so following 2021, we've seen one of the most bearish years. We used to call this in eToro the year of education,
Mm.
where everybody sort of were educated about the fact that what went up 10 times can actually go down 95% at the same ease and sometimes faster. And we saw that sort of bearish sentiment. A lot of the retail investors, by the way, with eToro actually stayed and hodled both their crypto assets and their stocks. So I think retail investors actually of 2025 have already learned sort of the worst time or bad times of the markets during 2022, both in crypto markets and capital markets. And the best way to avoid a significant sort of drop in your portfolio, diversify your portfolio. We believe that customers should diversify both between stocks, different industries, value investing, growth investing, tech investing, crypto investing, understand the different risks and understand the correlation between the different assets in your portfolio. I think I probably have, as an investor, one of the most diversified portfolios as a person. I'm copying about 40 different smart portfolios in eToro, which are managed by our chief investment office. I'm investing and copying about 90 different strategies of different popular investors on eToro. And I think I own about another like 80 different stocks and crypto assets in my portfolio. So an extremely diversified portfolio. And again, that's my view. Diversification eventually enables you to weather sort of bad times in the markets, specifically in sort of specific parts of the markets.
Yeah, well said. I'm in agreement. I've been preaching about diversification for years, like diversify your crypto assets, but also the equities market. You got to have exposure. So it's funny. My wife, she hasn't been a big believer in crypto because she thought it was like, oh, what is this? I don't know what this is. But she believes in like the equities market because that's what she knows, right? That's the institutional knowledge of invest in stocks, invest in ETFs. So she kind of runs that side of our portfolio, and I run the crypto. I'm the risk taker, but my portfolio is outperforming hers for sure.
Actually, stock markets, if you're investing in tech, did quite well as well in the last 2 years.
Sure.
My wife, by the way, runs a VC fund. So she's investing in private markets, and I'm in the world of public markets, and then crypto somewhere in the middle.
Oh wow, very cool. Um, Yoni, it's exciting times, man. I look forward to having you back on. Thank you so much for your insights. Excited for the future updates around eToro. Thank you so much for joining me.
Thank you very much. Super exciting times.